2023, Malaysia's economy has proven its resilience and adaptability in facing the global challenges. As one of Southeast Asia's most dynamic economies, Malaysia stands at the crossroads of growth, political change, and the aftermath of the pandemic. But what did Malaysia achieve during the remarkable growth? In this video, we will unravel together the journey of Malaysian economy in 2023 through four main variables.
Inflasi Malaysia.
Inflasi Malaysia.
Inflasi Malaysia.
Inflasi negara.
Inflasi di Malaysia.
The Department of Statistics Malaysia, DASM, reported that Malaysia's overall inflation rate was recorded at 1.5% in December 2023, compared to 3.4% in the first quarter of 2023. DASM said the inflation rate recorded in December was primarily due to slower growth in restaurants and hotels, which fell to 3.7% from 4.3% in November 2023, while non-alcoholic food and beverages, 2.3% compared to 2.6% in the previous month, as well as a moderation in various goods and services. Furthermore, although Malaysia's inflation rate decreased until the fourth quarter of 2023, the Consumer Price Index, CPI, showed a disappointing increase, recording 100.2 points in December 2023 compared to 100.9 points in November 2023. Moreover, it is higher compared to the year when the COVID-19 pandemic hit the country in 2020, where the CPI in December 2020 only recorded 120 points. It is clear that a decrease in the inflation rate does not guarantee a decrease in the price level of goods.
Kalau dulu saya nak beli apa-apa memang main ambil je, tak ada fikir-fikir kan. Sekarang dapat bawa balik sayur je. Mahal, ikan, ayam, udang semua mahal. Sayur yang macam ni pun dapat RM5. Belum lagi ikan yang lain-lain kan. Setengah kilo je RM12 lebih. Ni berapa ni kan? 25 sekilo. 25 sekilo sekarang.
However, economic growth in the fourth quarter of 2023 is very positive, supported by inflation that is moderated to 1.5%. This rate is lower than other developed and regional economies such as the Eurozone, 2.9%, the Republic of Korea, 3.2%, the Philippines, 3.9%, and Indonesia, 2.6%.
After the COVID-19 pandemic, Malaysia's economic growth has been improving year by year. This is a graph of annual GDP growth based on data collected from the International Monetary Fund. As shown, Malaysia's GDP in 2020 experienced a deficit of -5.5% due to the impact of COVID-19. It increased to 3.3% in 2021, reached a peak of 8.9% in 2022, but then dropped significantly to 3.7% in 2023. Additionally, here is a graph showing the annual GNI growth from 2020 to 2023, sourced from the Department of Statistics Malaysia. Similarly, GNI in 2020 saw a deficit of -5.0%. It began to recover with an increase of 2.8% in 2021 and 8.3% in 2022 but decreased by 4% in 2023. This raises the question, why did GDP and GNI decrease by nearly half in 2023? According to Datuk Anwar Ibrahim during the presentation of the 2023 budget on February 24, 2023, he stated the ongoing Russia-Ukraine war and the China-US trade war have exacerbated global challenges. Inflation remains elevated due to persistently high world commodity prices and disruptions in the food supply chain, which have also impacted Malaysia's exports.
So we know Malaysia is sensitive to changes in external demand, but how much so? Especially when it comes to some of its largest trading partners, so China and the US. So we estimated that the 1 percentage point fall in the US growth rate could reduce Malaysia's growth by 0.82 percentage point. And a 1 percentage point fall in China's growth rate could reduce Malaysia's growth by 0.45 percentage point. So this is how sensitive Malaysia's growth is to US and
Malaysia's economic growth was significantly impacted by the high base effect from 2022, when the economy experienced robust recovery driven by post-pandemic reopening and pent-up demand. This high base made it challenging to achieve comparable growth rates in 2023. For example, GDP growth slowed to 2.9% year-on-year in Q2 2023, partly due to this effect. Other factors, such as weaker external demand, also contributed to the slowdown, particularly in the manufacturing sector and exports, which became a drag on growth. UOB and HSBC both noted that the high base effect intensified in the middle of the year, further limiting growth momentum. Domestic demand remained resilient, supported by private consumption and investment, but this wasn't sufficient to offset external pressures.
In the third quarter of 2023, Malaysia's labor market saw steady growth, with total jobs reaching 8.90 million, an increase of 227,100 year-on-year. Remarkably, 97.9% of these positions were filled, leaving just 2.1%, or around 190,900, vacant. Semi-skilled jobs dominated the market, accounting for 62.5% of employment, while skilled positions made up 25%. The services sector stood out as the backbone of the economy, housing 4.60 million jobs, followed by manufacturing and construction. Encouragingly, 32,000 new roles were created, showcasing a recovering and diversifying economy. However, challenges remain. As Malaysia pushes towards industrialization in a high-income economy, the reliance on semi-skilled jobs highlights the need for upskilling the workforce and addressing gaps in high-value sectors. This period represents a critical phase for the nation's journey towards sustainable and inclusive growth. In Q3 2023, the services sector led labor demand with 51.7% of jobs, followed by manufacturing at 27.7%. Filled jobs were highest in services, 52.5%, while manufacturing had the most vacancies at 56.5%. The services sector also created the most jobs, 49.8%, reflecting strong growth in this area compared to others like mining and quarrying, which showed minimal demand. In Q3 2023, the labor market saw a 2.6% year-on-year increase with 8,903,000 jobs, up from 8,675,000 in Q3 2022. The filled jobs rate was at 97.9%, with 8,712,000 filled positions and 191,000 vacancies. Job creation rose to 32,000, led by semi-skilled roles, which comprised 62.5% of total jobs. In Q3 2023, the agriculture sector saw job numbers rise to 491,000, up 21,000 from Q3 2022, with a filled job rate of 93.8%. The mining and quarrying sector had 81,000 jobs, maintaining a high filled job rate of 99.4%. The manufacturing sector also grew, reaching 2,465,000 jobs, with a filled job rate of 95.6%. Overall, new job creation was notable across these sectors.
A few major reasons why youth unemployment is typically magnitudes higher than adult unemployment. The idea of a competency gap, in terms of that adults just have higher work-related experience. Of course, there are other things as well.
High debts accumulate due to low incomes and unemployment. This isn't just a problem for young people, but also for their families on low incomes. It means that young people have to take jobs on low wages in order to support their families.
Unemployment is a complex issue, but with collective efforts, Malaysia can build a future of opportunity for all.
Balance of payments. What is the balance of payments? The balance of payments is a record of a country's transactions with other countries. It consists of the current account balance, the financial account, and the capital accounts. Malaysia recorded a current account surplus of Rm 9.1 billion in the first half of 2023, equivalent to 2.1% of the gross national income, GNI. This improvement was driven by a surplus in the goods account, despite smaller deficits in the services and primary income accounts. However, total trade declined by 11.3% due to weak global demand, particularly in the manufacturing and commodities sectors. Gross exports dropped by 11.1%, while imports fell by 11.5%, with an overall trade surplus of Rm 53.9 billion. On the international reserves front, they remain strong at Rm 522.1 billion as of June 2023, sufficient to cover 5 months of imports of goods and services. This solid position continues to instill confidence among domestic and international investors. In conclusion, despite global challenges affecting Malaysia's trade, the current account performance highlights the resilience of the country's economy. We hope that ongoing economic recovery efforts will further strengthen Malaysia's international trade relations in the future.